Good evening, ladies and gentlemen. A very warm welcome to another virtual seminar organized by the Seminars and Conference Committee and Taxation Committee of the Institute of Certified Management Accountants of Sri Lanka, the national professional management accounting body in Sri Lanka, incorporated by an act of parliament. CMA has always played a lead role in digital environment to update the knowledge of its members by organizing continuous professional development program for its members and students. The presentation on recently proposed social security contribution levy will be conducted by a panel of experts in taxation. The presentation on the SSCL bill will be delivered by Mr. Atula Ranavira, Managing Partner Ranavira Associates, and this will be followed with brief presentations and a panel discussion moderated by Mr. N. Sulaiman, Tax Partner ENY. And the panelists are Mr. S. Pereira, Principal Tax and Regulatory at KPMG, and Mr. K. Sivanesan, Tax Consultant or Senior Partner at Amarsagar and Company. I also warmly welcome CMA President Professor Lakshman R. Vattavala, Council members, members of CMA, invitees, ladies and gentlemen. To commence the program, I have pleasure in inviting Professor Lakshman R. Vattavala, Founder President, CMA Sri Lanka, to deliver the welcome address and introduction to the today's topic. Professor Lakshman R. Vattavala has led the Sri Lankan accounting profession, having been the president of the Chartered Accountants, President South Asian Federation of Accountants, and the founder signatory to the formation of SAFA, founder of WAT Sri Lanka, and the founder CMA. He is currently a SAFA board member and chairman of SAFA International Relations Committee. A proud receiver of National Honors Sri Lanka Sihamani in 2019, installed in the Hall of Fame of the Institute of Chartered Accountants, and was awarded the Lifetime Achievement Award by CMA Sri Lanka. He is also a professor at Deakin Business School, Department of Accounting, Faculty of Business and Law at Deakin University. Professor Lakshman R. Vattavala, I am honored to invite you to deliver the welcome address. Over to you, sir.
Thank you. Thank you very much, Mr. Gajendra Puvendran. He is the chairman of our taxation committee and a member of our council, and has been actively involved in the taxation matters. So today, let me warmly welcome everyone for this tax seminar, which is on the introduction of the proposed Social Security Contribution Levy. And of course, we are planning to conduct it in a very simplified way, and we have some of the experts on taxation so that they will be able to explain this to you. Now, taxation is important for CMA because if you look at our syllabus, the taxation is covered at 2 levels, so that we give due recognition for the taxation syllabus, and also to see that the law is covered fully. So therefore, when there are any changes, it is very necessary and essential that we conduct a seminar to update our members and also those who are in the corporate sector and the other areas where they would like to listen to experts on taxation. Of course, we have some of the experts who have been conducting these programs earlier. We have Mr. Atula Ranavira, who will be doing the presentation, Mr. Nista Sulaiman, who is another expert from ENY and who is the moderator, and 2 other experts, Mr. Suresh Pereira from KPMG and Mr. Sivanesan from Amarsagar and Company. So just a few words about what is happening. Now, this is an implementation. I know that this should be given in detail, but it's an implementation of the 2022 budget proposal. But I know that it is very much delayed, because I was just looking at what was mentioned in the what was mentioned by the Honorable Minister at that time, the Minister of Finance. He stated as such: Honorable Speaker, aiming to rebuild Sri Lanka economy affected by the COVID-19 pandemic, a social security contribution is proposed. This contribution will be charged at 2.5% on the annual threshold turnover exceeding rupees 120 million. Rupees 140 billion is expected as revenue through this contribution. And of course, they said effective from 1st April 22, but the bill has only been gazetted recently. So we don't know. I don't know. I'm sure the speakers will be able to enlighten us from which date that this should be applicable. But there is also another important area, you know, that CMA Sri Lanka has been taking a very active role to assist the SME sector. Now, where we formed the CMA Sri Lanka COVID-19 SME Development Committee, and this Monday we celebrated with SAFA, the South Asian Federation of Accountants, the SME Development Conference to celebrate the UN MSME Day, giving recognition to the MSMEs in this country. So that's another great thing that we have done. But now we are getting something additional to the SME sector, where if their turnover is exceeding 120 million, then they are going to be liable to this special levy, social security contribution levy. We know that it is it is very good for them to make a contribution, but they should know how they can adjust themselves, their accounting and others, so that they can be prepared to make this contribution, which is required to rebuild the country. Of course, today's problems are a little more different than what it is. Of course, this was there at the time in November when the budget was presented. But today we are in a very serious problem. There is no lack of foreign exchange. As a result, our imports are affected, our industries are affected. There are long queues for petrol, for gas. So this we are in a very critical situation. But as professional accountants, we need to see how we can take the country out of this rut. Definitely taking the managed cost and management accounting profession, proper costing of everything has to be done. Expenditure has to be controlled. A lean diet has to be given to everyone. When you say lean diet, all the expenditure, unwanted expenditure should be cut, because today the direct expenditure, although it is there, the indirect expenditure is maybe 4-5 times the direct expenditure. So the government in the budget explained that all these indirect expenses, they will restructure the state corporations and do everything, but hardly we have seen anything, but only the taxes being increased. So this is not in the true spirit of the business community, and we need to see how we can do all in one without only trying to tax the businesses, because they are also in great difficulty as to how they can carry on their business. Especially the SME sector are in grave problems. There is no market, they are unable to import their raw materials, so they are in great difficulty. So this is an additional levy that will be there. I just also want to tell you something about the achievements of CMA Sri Lanka. You know, in our examination, we have 4 levels and a case study. Our level 2, which is the diploma level, has today been recognized by the Tertiary and Vocational Education Commission to be equivalent to a it's a higher national diploma. So that means the recognition, I think, is very worthwhile. Our seminars that we are doing, we are all wanting to show as to what we are doing on the education field. That could mean that if a person wants to get a university degree, after the higher national diploma, it's only 1 year. So this will also be recognized by locally and internationally. So everyone, even from the corporate sector who want to come and do our programs, will be able to do this diploma program, which is a level 2, which is called the operational level, and help you. So that also covers the taxation area. So I'm sure that this will be of great benefit. I thought that I will tell you, because we have a large audience who are, I think, almost more than 600 who had registered, but we are now having 343. Some of them have said they are having power cuts, but I'm sure that all of them will benefit. And so let me thank everyone so that they are able to enrich their knowledge. They will be able to get to know about what this new law is. And I'm sure our experts on the taxation field will be able to enlighten you and also answer any questions and give you a real gist of this special levy that will be charged. So thank you very much, and let me hand you over to Kajit.
Thank you very much,
I
sir.
just got the ball. I don't know.
Next on the agenda is the presentation on the introduction to recently proposed social security.
I'll give the numbers.
Next on the agenda is the presentation on the introduction to the recently proposed social security contribution levy bill by Mr. Atula Ranavira, managing partner Ranavira Associates and an expert in the field of taxation. He is a fellow member of the Institute of Certified Management Accountants of Sri Lanka, the Institute of Chartered Accountants of Sri Lanka, the Institute of Accounting Technicians of Sri Lanka. He also holds honors degree in business administration, BSc Business Admin from the University of Sri Jawatanapura. Mr. Ranavira counts over 4 decades of experience in the accounting and taxation profession. Further, he is a consultant to Ascent Secretarial Consultants Private Limited, engaged in company secretarial services. In addition to the audit practice, Mr. Ranavira has a wide experience in tax, company secretarial services, and in investment advisory and promotions. Over to you, sir.
Yeah. Good afternoon, everybody. Thank you very much, Gajendra, for that introduction. Right. I would like to continue with my presentation. I would like to open a PowerPoint presentation which I have prepared for this special purpose. I'll open my PowerPoint presentation. Yeah, I think it is visible.
Yeah, it's visible.
Yeah, it's visible and I'm audible, I think. Yeah. Yeah. This is today what I'm trying to discuss is the technical part of this particular bill. Still, this is in the bill stage. The Social Security Contribution Levy, what they have proposed in the budget at the rate of 2.5%. Right. I have in this presentation, we can share this presentation after this discussion with everybody who is participating for the today's session. I have given a small, as usual, I have given a small index for this, but I'm not going to read it again. But I'll enter into the subject. Right. First, we'll see this being a tax. It is a tax. It's a charge. When it is a charge, we should know on whom and on what and on what percentage the tax to be paid and when it is to be paid. As we know, all of us are in a difficult situation. The country's cost of living has almost doubled or more than, maybe even more than that. And even other things beyond the cost of living, the other things, even the capital expenditure also has doubled or more than. Now, everybody are in a bad situation at present. Right. Now, in a situation like this, now why this government wanted a tax like this? Right. Now, as we know, the government tax revenue has come down materially during past 2.5 years. The biggest blunder, what they have done is the reduction of various taxes in Sri Lanka, mostly with effect from 1st January 2020. They reduce income tax. They abolish most of the withholding taxes, which are cost-free collection. Then they reduce the VAT rate and they withdraw certain other taxes. Now, as a result, their tax revenue has come down materially. Now, after doing that, now the government is in a heavy financial difficulty, right? Now we'll see what this tax is. This is Social Security Contribution Levy. We are supposed to contribute for the Social Security. I don't know who has created. It's a created security issue, created issue. But now we have to contribute something to get rid of this issue, right? Now they have recognized, now who should pay this tax? Tax to be paid by taxable person. Tax to be paid by a taxable person. Now we should know who is a taxable person. They have categorized, they have identified 4 people, 4 persons as taxable persons: importers, manufacturers, service providers, and traders. There are 4 categories: importers, manufacturers, service providers, and traders. Then on what we have to pay? That is on the taxable turnover. That is on the taxable turnover, liable turnover. At what rate? Basically, the rate is as proposed in the government budget 2022. It is at the rate of 2.5%. Now, but in certain cases, this tax need not to be paid on the full amount. There are some exclusions or some reductions. Now we should know what are those the reductions and what are those exemptions, right? Now we'll take one by one. In the case of a importer, a taxable person called as importer, engaged with importing, right? Value of the article ascertained for the purpose of VAT at the custom clearance. Now at the custom clearance, there's a value called value for tax. On that, only they are charging these different taxes like import duty, excise duty, various cess and various VAT and various things like that. Then for the purpose of VAT, there are some loadings also, margin loading, right? Then we have to take the value basin for VAT calculation at the time of clearing the goods. Now, what is the percentage? We have to pay this 2.5% on the entire turnover, that is 100% of that value. On the 100% of that value, we have to calculate 2.5%. Now here, this particular law, the administrator is the Inland Revenue Department, but only in the case of import-related transaction, Director General of Customs is supposed to collect this tax and issue a receipt or a receipt for that. His duty is that. Right. Then we'll move to manufacturers. Now, in the first case, personal baggages are excluded. Basically, personal baggages are excluded. Not in commercial way, not in commercial samples. Yeah. Then manufacturers. In the case of manufacturers, on the we have to take the total turnover. Out of the total turnover, we have to calculate 85%. Out of the liable turnover, only 85% is liable for this particular tax. Right. Now, what is this turnover? The sum receivable, whether received or not in the quarter, sum receivable, whether received or not in the quarter, of any article manufactured and sold in Sri Lanka. That is the value what he is basing for value-added tax. Same base. But we have to take only 85% of that turnover. On that 85%, we have to calculate 2.5%. Then the third category, service providers. It includes financial services, then the real estate and improvement business, as well as any other services. All services are included. Specifically, they have mentioned financial services and real estate improvements is also included. Now, the real estate improvements, as you know, when we are calculating the VAT, we are paying VAT only on the value addition of that. Only on the value addition of that. Right. Likewise, we have to take the same. Now, in that case, we have to take the 100% of the value taken for VAT calculations. Right. Then wholesale and retail trade, that is trade-in part. In the case of trade-in part, they have categorized into two. Now they have separated the distributors of locally manufactured goods. In the case of distributor of locally manufactured goods, he has to take only 25% of the turnover, which is liable to 25% of the turnover. Only on 25% of the turnover, we have to calculate 2.5%. In the case of all other trading activities, whether wholesale or retail, or whether imported items or local items, he has to take 50% of the turnover and calculate 2.5%. Now, some ask question. Now, suppose I'm in the business of import trading. At the time of importing the goods, I have to pay 2.5% on the total value, 100% of the value. Then when I am selling those things in the local market as wholesale or retail, I have to take again on my sales value, 50% of the sales value and calculate 2.5%. That means I may be paying 2.5% earlier. Now, another half of that turnover, but the turnover is greater than that because we have to account for our overheads, and we had to cover the overhead, then the profit and all. After adding all these things on our sales price, we have to take 50%. Right. These are the basis with relate to this tax. I'll move to the next slide. Who is liable? As I mentioned, a liable person. Liable person is called as taxable person. Then what is the effective date? As per this bill, it is effective from 1st July 2022. Tomorrow is the effective date. But there are a lot of people are discussing that most probably they will extend this date by 1 month. There are reasons for that, as well as they can, if they want to, they can implement from tomorrow, because the payment date is on a subsequent date. And this is not like that. You are not directly, the law won't say that you have to recover it from the next party. It won't say. As a result, now suppose I am the business person, whether I have recovered it from the next party or otherwise, I have to pay this. With that situation, and as the date of payment is also, I have time till 15th of the subsequent month. As a result, they might strict on this date. But a lot of rumors are there that they are proposing to extend this date to 1st of August. Now we don't know what is the situation, because still this is only a gazette. Right. Then third, on what? As I mentioned, on the liable turnover, then what is the rate? As I mentioned, it is 2.5%. Then for this tax, there are 3 items from this tax or excluded from this tax. One is a bad debt. If you have incurred a bad debt, you need not to pay this particular tax on that bad debt. But on a subsequent date, if you will recover this bad debt, then definitely you have to pay this tax on that date. Then on the VAT. On the VAT component, what you are charging from the next person, on the VAT component, you need not to pay this 2.5%. Okay. Then any rebate received under the export development rebate scheme. If you will receive any rebate from the export development rebate scheme, you need not to pay tax on that. That's this particular tax. I'll move to the next slide. Registration, because I would like to have more time for the discussion. Registration. Now, if you are liable, when you should register? As per this law, on or before 15 July 2022, you have to get the registration. As per this bill, by on or before 15th of July 2022, you are supposed to get the registration. Every taxable person other than an importer should get this registration. Why importers are not included? Because automatically they have the custom registrations in the system. Then at the time of clearing the goods, you have to pay that. Therefore, they have not included this registration requirement into the importers. But in all other three cases, the manufacturing, service supply, and trading, you have to get the registration. Now, what are the registration threshold? There are two registration threshold. One registration threshold is relevant to the past year. The year ending by today. The year ending by today, suppose your annual turnover was exceeding 120 million, liable annual turnover exceeding 120 million, then you are supposed to get this registration. Liable taxable income, turnover, right? Now, suppose last year your turnover was only 100, therefore you are not supposed to get the registration. But from tomorrow onward, if they'll implement tomorrow, from tomorrow onward, suppose your turnover in future, for any quarter, suppose your turnover go beyond 30 million, then immediately you have to get the registration. No sooner your quarterly turnover go beyond 30 million, you are supposed to get the registration, right? Then, now there are two exclusions here. If if a person meets the threshold over a single isolated transaction, there may be certain situations like that. As a single isolated transaction, your turnover might go beyond 100, might have already gone beyond 120 billion, or in future it is going beyond 30 million. If it happens, after requesting after pointing out that fact to the Commissioner General, you can get an exclusion on that. Then you need not to get the registration if there's a case like that, right? Only thing Commissioner General should be satisfied with that. Then the second thing, if the Commissioner General recognize with the nature of the activity a person is required to get the registration, then definitely even the turnover, the past turnover is below the threshold, Commissioner General can give a registration for that particular person, right? How to cancel? Now we got the registration. Now next step is how to cancel a registration. You can't get cancel a registration until expiration of 12 months of the original registration. During the first 12 months of the original registration, you can't get the cancel, but you can apply for a cancellation after completing these 12 months. If the application facts are correct, Commissioner General can cancel it, right? Cancellation of the taxable activity. What are the reasons? They have quoted two reasons. Cessation of your business. You have stopped your business, or aggregate turnover has come down to these threshold. Aggregate turnover has come down to this second threshold. Second threshold, in this case, they have for per quarter 30 million, but here they have taken 120 million per annum. If your turnover has come down, that means just because your turnover has come down in a quarter below 30 million, you are not entitled to do that. This month, your turnover, this quarter, your turnover has come down to 30 million, come down to 25. We'll say next quarter also 25 million. The third quarter, it has gone up to 60 million. If it is the situation, during the first two quarters, you can't get it cancelled. You have to wait until the year end and total up the amount and get the cancellation, because they have given this ceiling as an annual ceiling. That's a practical issue. Regarding the cancellation, Commissioner General shall inform the date of cancellation. From that date only this cancellation is valid. He can inform by registered post or by electronically, right? Continuation of the liability upon cancellation of registration. Now, even you get the cancellation, even after getting the cancellation, for whatever the liabilities and responsibilities you made during the past period continues to be. Past period where the registration was valid, during that period your responsibilities continues. Next, registered taxable persons duty to notify changes, right? Now for registration we have to give various information. If there are any changes of this information, within 14 days of that change, you are supposed to inform that to the registrar, to the Inland Revenue Department. What are these changes? They have mentioned, they quoted certain changes. The name and address and the place of business you carried out, change. Then change of nature of the taxable activity. Then the change of persons authorized to act on behalf of you and sign in the documents, right? Sign the documents. There is authorized representatives. Then ownership of the taxable activity. Even if the taxable activity ownership has passed on to another person, you are supposed to inform that to the Inland Revenue Department for better tax administration. Then we'll talk about the tax returns. These tax returns to be filed on quarterly basis. On quarterly basis, on or before 20th of the month immediately after the quarter. Right. Then Assistant Commissioner shall issue a notice to a person who failed to file a return. If a person failed to file a return, the Assistant Commissioner is has to issue a notice within 40. Then according to that notice, he can inform from the notice date within 14 days, you are supposed to file this. That is the information. Then the Assistant Commissioner shall acknowledge the receipt of return only if he receive a proper return. It says proper return. Then now the Commissioner General is supposed to design this report, return. Then we have to properly fill it and hand over, properly fill it and file along with the required other documents. Then properly filled return to be acknowledged by the Assistant Commissioner. For the purpose of obtaining full information, if the Assistant Commissioner wants further information, full information, the Assistant Commissioner may give notice in writing or by electronic means. Failure to comply with the provisions may be subject to penalties. If will not meet the requirement, they can charge penalties. Now we'll talk about the assessments. When it is a tax, once he failure to do obey to the law, then there are penalties. Even to implement these penalties and all, there should be an assessment process. Assessment. Under the following circumstances, the Assistant Commissioner may assess the levy and inform you. What are the reasons? Fail to furnish a return. Suppose the registered person failed to file a return, or fail to pay levy, or request to make an alteration or addition to the return furnished. Under these three circumstances, Assistant Commissioner can assess the tax and inform. Right. Power of Assistant Commissioner to determine the open market price. In certain cases, these persons might undervalue the things. To avoid that type of situation, suppose the Assistant Commissioner feels that he has not declared the market value, then he can assess it. He can decide it. Now, under these two circumstances, if we feel that this particular person sold any article or provided a service for a value less than the open market price, or entered this transaction between two associated persons. If you are dealing with associated persons, as these definitions will be as similar to the Inland Revenue Department, Inland Revenue Act section 196 definition. If you are dealing with associated persons, then you have to be very careful. You have to think about the value what you are putting, whether it is the market value, right? Disregarding of certain transactions and disposition, that is also important. Under the following circumstances, Assistant Commissioner may disregard any such transaction or disposition. What are the circumstances? If any transaction reduces or would have effect to reducing the amount of levy payable, right, resulting the tax reduction. Second, that any disposition is not in fact given to effect to the effective. Now, in those two situations, he can disregard it. Then we'll see about the time limit for additional assessment. Time limit, time bar, that is very important. It is 3 years. 3 years. After expiration of 3 years, after expiration of 3 years from the end of the relevant quarter, in respect of where the return is furnished. From the end of the quarter, 3 years, within 3 years, if IRD want to issue assessment, should issue. No more assessments thereafter. Then we'll talk about the payment and collection of this tax. Now, in the case of this, the accounting basis has to be accrual basis. Then payment of levy, it is to be paid on monthly basis. Every month tax to be paid on or before 20th of the subsequent month. Then default penalty. If there are any default, there are penalties for immediately. No sooner you default, there's 10% penalty, which valid for first month. If you go beyond 1 month, for the second month or any for any additional month or part thereof, there's a loading of 2%. That means if you delay more than, we'll say 30 months, you are supposed to pay, you are supposed to make a payment by 20th of April, we'll take it as 20th of August, but you paid on 21st of August, then immediately 10% penalty is there. Suppose you settled that on 21st of September, then 10% plus another 2%. Likewise, it is adding. Then collection of levy by the Director General of Custom. As I mentioned, Director General of Custom is supposed to collect the levy at the time of custom clearance and issue an endorsement on the import invoice. He has to give an endorsement on the, basically it is on the CUSDEC, right? That is the receipt for that. Now, once we receive any type of assessment, how to appeal it? According to this law, if we are not satisfied, if this person is not satisfied with the assessment, should appeal within 30 days of the assessment. Can appeal electronically or manually. Right. Then, once we submit an appeal, from the day of receiving that appeal, within 30 days of receiving that appeal, Commissioner General should acknowledge it. He has another 30 days. Then every appeal shall be agreed or determined by the Commissioner General within a period of 2 years. Now, once he received a valid appeal and acknowledged, then within 2 years, he should attend to that and finalize it. From the day of receiving, 2 years. Now I have given a note. Please be noted that the process of appealing and appeal hearing is mostly similar to the provisions given in the Inland Revenue Act. Right. Now we'll move forward with the appeal to the Appeal Commission. Now you appeal to the Commissioner General. Commissioner General gave you the determination on that, but you are not satisfied with that determination. Then if you agree with the determination of the Commissioner General, you may appeal against such determination to the Tax Appeal Commission, another tax to the Tax Appeal Commission. Handling to the Tax Appeal Commission. Finality of assessment. Now, at the department level, suppose you have not lodged a valid appeal, then that assessment is finalized. Or once the Commissioner General issue his determination, that is a finalized assessment at the IRD level. But you can appeal to the Appeal Commission. Now, I have given a note, nothing in this section shall prevent an assistant commissioner from making assessment or additional assessment for any relevant quarter if it does not involve any matter which has already been determined in the appeal, on the appeal. That means now we'll say that in the appeal, the previous assessment, it covered only 1 million rupee. That is a separate thing. Then subsequently, he found that he has understated another tax of 2 million. Now, for that additional tax of 2 million, assistant commissioner can raise an assessment, but not for the previous, the original 1 million. Right? How to recover? Now, this levy, how to recover? Now here it says the levy is inclusive of the penalty, if any. It is a first charge of all assets of the defaulter. It is a first charge. Then no sooner you default it, Commissioner General is supposed to issue a default notice, should issue a default notice to the defaulter. Where an assessment has been made by the defaulter, has not appealed within 30 days, then he may within 30 days make an objection against this default notice. Now, you suppose you have not appealed for the assessment. Now, this is the second chance, second and last chance to lodge not an appeal, but an objection. The Commissioner General can make a decision on that. The Commissioner General shall, notwithstanding the provisions of Section 34, consider such objections and give his decision thereon at the final. In that case, that is the final. Now we'll talk about the liability of certain persons. Now, in the case of trustees and executors, joint situation, each person separately and severally liable for this levy, to this levy. Then we'll talk about who can make regulations. Then the main regulation is passing this bill in the parliament. Subject to committee level amendments, they will pass this in the parliament. Once it is passed and signed by the speaker, that becomes a legal document, legally valid document. But thereafter, under this act, there are a few places where minister has the authority to do certain regulations. In those cases, minister can make those regulations on a few items. Once he make the regulations, he should gazette it. He should gazette it within 30 days of, within 3 months of gazetting. Within 3 months of, he can implement it, no problem. But within 3 months of the gazetting, he should get it passed by the parliament. Suppose the parliament didn't pass it. Now we have some Supreme Court cases happen earlier. For the past period, generally that law is valid. But from the day the parliament refused to pass it, from that day onward, it is not a valid tax. For the past period, for the interim period, normally it is valid. Now we'll talk a little about the exempted articles and services. These are listed in the schedules. Now, for you to get further, for your easy reference, I have copied down to him and reproduced in slide number 20 to 27. If you'll see the slide, now this is slide number 16. If you'll see slide number 20 to 27, I have given these things, highlighting the important places. Now, basically a summary, any article imported by manufacturer is exempted. Any article imported by a manufacturer, exported by a manufacturer, it is exempted. Then any article not being plant machinery and fixtures, imported by any person exclusively for the use in or for manufacture of any article for export, that is raw material to be used to manufacture something and export, it is exempted. Then basically any article sold by a taxable person to another exporter, indirect export is also exempted. Then any article which is imported for temporary purposes like display at an exhibition, temporary use in Sri Lanka for a project, then the purpose of repairing certain things in Sri Lanka for export connected businesses, those are exempted. Then other articles listed in part 1A and part 1B of the first schedule to the bill, those are the things which I have given the full list in, I have given in that, in these slides. The services listed in part 2 of the first schedule to the bill, those are direct and indirect services exports. Direct and indirect service exports are excluded, are also exempted. Now I have given here the bill. What I have done normally when I get a bill or act, first thing in the first night, I read the entire thing, get highlighted the important places. Likewise, I did the same thing and I thought of sharing that document with you all for your easy reference. Now, if you log into Runaway Associates website, through this professional education tax notes, you can get it downloaded. They are the specialty, the important places which I felt as important. I have highlighted those things. Now I have given a small calculation of SSCL, a small calculation. Say the expected price before SSCL. The price what we wanted without SSCL, suppose it is 100 rupee. What you have to do, you have to add the SSCL component, what you are charging. Then under the normal circumstances, 100 divided by 97.5 into 2.5 is the answer. Because you have to, once you add this SSCL, because definitely you are running a business. If you are running a business, definitely you should recover this from the next party. Otherwise, you may have to close down your business, right? Whether we like it or not, we have to do that, right? Therefore, we have to add it to the price. When we are adding, we have, once we add it, we have to calculate this tax on the total, therefore, we have to, when we are calculating this, we have to charge on tax. We have to charge the tax on tax as well, right? Whether we like it or not, we have to add this. Otherwise, that will badly affect to our business. That is the very reason why I have divided by 97.5 and multiplied by 25. But I have given a small asterisk mark and given a note. If your liability is on a lower percentage, like 85% or 50%, then please apply that percentage here. Not 100, then 100 into 0.85% or 100 into 0.5%. And thereafter, you can apply this 9 divide by 97.5 and multiply by 2.5. Now the total, your price to the customer is 102.56. There are some more decimals. That is the VAT base. That is the VAT base. Right. Now, once you get this VAT base, next step is to recover the VAT because you have to give a tax invoice to your client. Then you have to recover, you have to add the VAT. Then on this value, 102.56, these are the decimals, you can calculate 12% and add that 12% to the price. Then you are getting the total price inclusive of VAT at 12%, 114.87. You can apply this, but this gets changed if you have a lower percentage here, right? Then I have given a note, as we have to be genuine to our clients. When we are doing businesses, we have to be tactful, but we have to be genuine to our clients. Otherwise, there's no future. It's a temporary business thing. We have to be genuine to our clients. And they have the right to know the information. That is their right. They should know, they have a right to know the information. Therefore, it is my recommendation that it is recommended to show the SHCL amount charge on the face of the invoice. What I am proposing is, best thing is to show the SHCL on the face of the invoice, because that is not our income. Why we are charging this? Because the government wanted it. As a result, because the law won't prohibit of showing this on the face of the invoice, not like in the VAT law. VAT law, of course, if your customer is not a VAT registered person, you are prohibited of showing the VAT because government wanted you to cheat your client. But here that clause is not there. Therefore, best thing is to show this separately, show this person separately. Right. Saying that, I would like to give a small conclusion remarks. in the angle of the government, now government, the tax revenue to the government gross domestic production, it was 12.7% in 2019. It has come down to 8.7% now in 2021, mainly because of removal of or reduction of certain taxes. That is the biggest blunder what they have done. Now they are saying no income, no even rupee to pay government salaries. We have no income to pay fertilizer subsidy. We have to print some money. Ultimate result, what is the ultimate result? Cost of living is going up because of the devaluation of our money, inflation. Now, anyway, the real fact, government is really bankrupt. Therefore, from their side, they need money. Right? How they have got bankrupt is another story. If all of us know the secrets, right? The second part, in the angle of the business people and the domestic consumers. Now, both business people as well as the domestic consumers are in a bad wicket now. Cost of living has gone up materially. As a result, now with this tax, what will happen? In this tax, there's no input tax, input credit. You have there's a huge cascaded effect. As the cascaded effect is there, the every time the interim business people are, this is connected with the interim business people, the price is going up. Now, according to my estimate, the cost of goods and services will go up minimum of 2.5%, maximum of about 7.5 or maybe even 10%, but maybe by about 7.5% average. The cost of goods and services in Sri Lanka will go up roughly about 7.5% because of this tax. It depends in the nature of the link now in this, from the importer to the ultimate consumer, from the manufacturer to the ultimate consumer, the parties involved, with the parties involved, this is getting changed by the roughly effect maybe like this. Then for the survival of business entities, whether they like it or not, they have to charge it to the next party, because otherwise you can't survive, right? Ultimately, domestic consumer will bear the entire cost. Now, this is a general thing. Some of the provisions of this bill is not comprehensive enough and sufficiently covered. I can't understand why this bill is so poor. It is so poor. Now, if we'll go in depth, so many important things are not covered, just copied down from one of our old acts without basic knowledge, without the basic knowledge about the countries, businesses, and other people. Now, the first schedule to the act is not comprehensive enough. Now, as an example, import of material for TIP scheme, under the TIP scheme, temporary import for export scheme, and various duty-free schemes under BOI or non-BOI. And those are not properly covered. It is covered, but the wordings are not sufficient enough. If you take the coconut products, so four agricultural items are covered, specifically covered, or 4 or 5. But certain things are not covered. Instead of using a general term, they have specified 3-4 items. Now, no sooner they specified like that, ultimately we may have to beg and go behind the tax administrators to get it defined. That is not the correct way. Why should we beg behind them? They are there to administrate the tax, not to create the tax laws, right? Now, when the tax laws are poor, ultimate result is that it's an additional cost to the taxpayer, because taxpayer may have to hire a consultant who will charge for the service. Ultimately, ultimate taxpayer is the one who is suffering with that, right? Now, in the case of service providing in the export connected services, some of these things, interim services are not well addressed to. Right. Now, even I just mentioned as on behalf of CMA, thank you. I would like to take 2-3 minutes just to run through the, before winding up my session, the exemption schedule. Now, this exemption schedule, there's one schedule, part 1A, imported or manufactured, with relate to the import or locally manufactured. I have highlighted, this is after highlighting the bill, I have copied down these things. I have, therefore it is easy for you to refer. Now in this, in one place, see petroleum and petroleum products other than lubricants classified under harmonized code such and such, for the custom purposes. That is given, right? Then likewise, various things are there. Now, I'll take one more item, which is a questionable item. Then, right. Now, in this part 1B, it says wholesale and retail trade. Earlier one, import and manufacturing. This is wholesale and retail. I have given this additionally for your easy reference, and connecting section in there. Now, in this, see, there's an item, petrol, diesel, kerosene sold in a filling station. In a filling station. Suppose petrol, diesel, and kerosene is not selling in a filling station, what will happen? There's an issue, right? Whether it is legal or illegal, that's another thing. For tax, the business legality is not important. When it is a tax law, we have to cover everything. Then, now this, see the last item, fresh milk, green leaf, cinnamon, or rubber, purchased from any local manufacturer or local producer. Now, that is given like that. In one of the earlier schedule, in one place, tea is covered. In one place, the tea is covered like this. How it is covered in one place. Yeah. Yeah, see this item, tea supplied by manufacturer, being a manufacturer registered with Sri Lanka Tea Board, to any registered broker for sale at the Colombo tea auction. Now, when these manufacturing plants, manufacturing tea producers, then when they sell those things in the auction, it is exempted. But sometimes they sell small quantity to their green leaf suppliers, to their employees. That's a small quantity. That component is not excluded because it is exempted because it is domestic consumption. Okay. Then we'll go to the other one. Now here, fresh milk. The tea is covered in the other place, no? Fresh milk. Green leaf mean any green leaf. We have to assume that it is green tea leaf. What they are trying to cover is green tea leaf, not green leaf. The term is wrong, right? Then cinnamon, rubber, purchased from a local manufacturer or local producer. Now, why they have listed like this? See, coconut is not covered. Vegetables, not covered. Why they wanted to specify these things? That is why I am saying this is prepared by a person who doesn't have proper basic knowledge of this. Right. Now here in this, instead of coconut products, paddy, rice, vegetables, those things are not covered well. Therefore, what they could have to do is to, why can't it cover as locally produced agricultural producers? Instead of this listing items, what they could have to do is to say locally produced agricultural products. Then the requirement covers with that, right? Saying that saying that I would like to wind up my session, keeping room for me to answer at the discussion level. Thank you.
Thank you very much, sir. Next on agenda is a brief presentation and panel discussion with experts in the field of taxation, moderated by Mr. N. Sulaiman, tax partner Ernst & Young. Joining us as panelists are Mr. Suresh Pereira, Principal Tax and Regulatory at KPMG, Mr. K. Sivanesan, tax consultant or senior partner at Ambersagar and Company. We invite you to send your questions using the question and answer and not through the chat box. Over to you, Sulaiman.
Thank you, Mr. Gajendran. I hope I can be heard and seen.
Yes.
Right. So I think I would like to first take this opportunity to thank CMA for giving me the opportunity to moderate this session. I think the participation is very good so far. I would like to request all the participants to send your questions to the Q&A. I think that has been mentioned a few times. So before we start, I think we will. I will just give a few thoughts that have come about as a result of the presentation on this new bill, the proposed Social Security Contribution Levy Bill. The first of them is, of course, like Mr. Atula Ranavira quite explicitly put out, is this different rates applicable at each, different effective rates, I should say, applicable at each stage of a process, where ultimately the cascading effect of this, what is the ultimate cascading effect to businesses plus the end consumer, is something that taxpayers and businesses need to evaluate carefully to ensure your costing and pricing is done appropriately. Otherwise, there are going to be significant impacts on margin. So just to give an example, and I think this was to some extent covered in the presentation, is that if you take a good and you have a significant component of that good imported, you will be paying 2.5% on the cost at import point. Right? So it starts there. Then you will use that to manufacture a product. Then the manufactured product, 85% of that is again taxed at 2.5% and sold at a wholesaler. So 2.125 gets added. The wholesaler takes it and then sells it again. He pays 2.5% on 50% of his value, inclusive of all his profits and all of that. Another 1.25 gets added. It goes to the retailer or the supermarket, who will again add 2.5% on 50% of the value, another 1.25%. So a total of about roughly 7.1 to 8% is likely to get added if none of these levels are going to absorb this cost. It may be even more when you take the profit added at each level. So it's likely to even go beyond. So this was to some extent taken into account in the NBT law, where only manufacturers are given some input. That has come in the form of this liable turnover being adjusted. So that is something whilst whether it has been taken into the workings of the revenue that the government wishes to or wants to achieve from this tax is something. So the revenue projection from this envisages all of this cascading effect is one issue from the government side. The other is the cascading effect has to be taken into account in relation to businesses costing and pricing their products. The second issue I just wanted to bring up is the extensive exemptions given, right? And it seems to be a bit of a copy paste from the NBT law, which I think, since the mechanism is a little different, should have been probably relooked at from the beginning, is my view, where Some exemptions have just been taken in. What is the rationale for each of those exemptions? Are those sectors actually deserve it, or should they be given? What is the rationale for giving one sector and not giving the other? Has that discussion taken place? Has private sector been brought in to discuss? Have professionals been brought in to look at this? Have we looked at it with VAT and income tax? So if you look at this, some sectors won't pay any tax at all. So whether that is reasonable whilst they can afford to pay, for example, is something that has to be looked at, because this is a new law. Unfortunately, like Professor mentioned at the beginning, this was proposed in last year in November. So it's almost 9 months, I think now, 8 to 9 months, and it is only now that the bill is coming. So there's plenty of time for these deliberations to happen, which I'm not sure happened. I'm not aware that it happened. So the exempt list also, I think, is a concern that should be looked at from a point of view of treating businesses to in some sort of equality. And the last point I want to make is what Mr. Athula Ranavira mentioned, is that there are a few lacunas in terms of sectors being captured. For example, he mentioned only 4 sectors: so imports, manufacture, services, and wholesale retail. What about agriculture? Like he mentioned, that's a different sector. What about construction and sale? It's construction is technically not manufacture. Royalties, rents, dividend, interest, clubs and associations, and so forth. A lot of sort of areas, whether you can plug it in or not plug it in, whether it's a service, whether it's something else. So there are gaps in it which will cause disputes, which I think should be also addressed. And this is the ideal time, I think, the bill time of the bill where we should probably engage the Ministry of Finance as well and send this feedback in order for these areas to be discussed with relevant industry and professionals, and some sort of solution brought before it actually becomes law. So with that, those are a few views that I had. I would like to invite Suresh Pereira and thereafter Mr. Sivanesan to give us their take on this bill, maybe in about 10 minutes, Suresh, and then after that, Sivanesan.
Thank you. Let me begin by thanking CMA for inviting me to participate as a panelist in this session. And I will start from one of the questions I saw in the chat in relation to the effective date. Now, I think Mr. Ranavira also touched on this issue. In this bill, there is a reference to 1st of July. Whether it will be 1st of July or whether it will be 1st of August or any other future date, I think is dependent upon as to how this bill will get legislated. Now, as we all know, this is a bill. This is only a document that was approved by the cabinet, and that has been gazetted, and it has not been placed in the order paper. And there is a procedure for a bill to be legislated in the parliament, and that is according to Article 78 of the Constitution. After the approval by the cabinet, it must be placed. It must be published in the Gazette for at least for a period of 7 days. And after that, at any time, it could be placed in the order paper. It has not happened so far, and it will get, once it is placed in the order paper, there's a time period of 7 days for anyone interested to challenge it for unconstitutionality in the Supreme Court. Now, in the past, we have observed many bills that were published have been challenged sometimes successfully in the Supreme Court. Whether this bill will also face that fate, we have to keep our fingers crossed. To me, when I see this, I don't see anything much illegal about this. There's section 59 again, which Mr. Ranavira pointed out when he was doing the presentation, in relation to the minister's power to regulate, publish regulations in gazettes, and those regulations with what we call those are basically secondary legislation, and those must be brought before the parliament within a period of 3 months. And once it is approved, it is valid thereafter. But it is disapproved. It is the disapproval is only from the date of the rejection by the parliament. But anything done before that, during that period, remains valid. Now that is a it's area that we need to check, specifically in the special GST bill. When it was a challenge, it was pointed out that under 148 of the Constitution, since the full control of the public finance is with the Parliament, if this mechanism results in Parliament losing the control even for a temporary period, a small period, in relation to the public finance, then that would be termed unconstitutional by the Supreme Court. But here now in the special GST bill, the gazetting procedure or the regulation procedure was in relation to identification of the subject matter, the rate, etc., which directly deals with the quantum of the taxes to be collected and from whom the tax to be collected. But here what we see is the general regulation. But as long as this general regulation does not eat into the powers of the Parliament in relation to public finance, then it will not be considered unconstitutional. So because of that, I don't think there is a room or whatever to challenge this bill. So my take is that this bill may go through as it is once it is placed in the order paper. So there will be a time period, or rather there will be a the normal procedure will be taking place. That is basically under the standing orders 45 and section standing order 50 is there will be a first reading, there will be the second reading and the voting, and thereafter the committee stage and the third reading and the voting, and then the final certification by the speaker. So once it is certified, then only it gets the legal enforceability in Sri Lanka. And as Mr. Ranavita rightly pointed out, there is a possibility still since the payment date is on a subsequent date, maybe some sort of retrospective will come in relation to the first quarter. So first quarter payment, which is due, first quarter, which consists of July, August, and September, still could be covered if it is worded appropriately there. But we don't know whether it will happen, because that's something that we will keep our fingers crossed. And I hope that only the last 2 months in the quarter should be taken into consideration and not the first part, because though this is not technically a tax that should be passed on to the consumers, there's no statutory mandate to pass on. But what happens is, just like NBT, just like defense levy earlier, national security levy, and the turnover tax, the practice will be to pass on this to the consumers by creating a contractual obligation, and think that is what will happen here. So in light of that, I think it is appropriate that the effective date to be 1st of August rather than the 1st of July. So that's one aspect of it. And then also we need to, I need to make a comment with regard to the policy in relation to this tax. Now, why is this tax coming again? As you know, okay, we do have a we have witnessed a drastic dip with regard to the collection of taxes during the last 2.5 years. But then we thought basically that's being rectified with the increase of the VAT rate, and basically again policy changes being introduced to income tax regime also. But somehow this this specific tax was proposed in the budget last time. Because I think the previous government did not want to go back to changing the VAT rate and the income tax regime. To cover that only, this social security contribution levy 2.5 was suggested. But now what we see is, on top of restoring the status quo of the income tax and the VAT to somewhat, we are seeing this tax is also coming. So is there a double jeopardy because of that for the consumers is what we have to ask here. Because we are going to see now, the one consolation is, okay, yes, the NBT that was there is what we see here also, but with some changes to the exemption list and the rate and the threshold, the threshold which was at 12 million is now we see at 120 million. So one can say that, okay, what we are witnessing here is the principle, the broader shoulder should carry more burden. That's what we see. But then what happens is, this is not like income tax, because in practice we will see that this getting passed on to the consumer. So in other words, we will not see the broader shoulders carrying this burden will be passed on to the consumers. So sometimes the concept of or what is meant to be achieved by increasing 12 million to 120 million may not get achieved there, but to a certain extent it may not get achieved there because it will go on to the consumers, the cost there, right? In relation to this, I also again want to ask the question: if the policymakers' idea is to keep the small businesses out of the social contribution levy net, that is the reason why a threshold of 120 million being used, then I would like to ask that question here. I would like to ask the question here: is the should the threshold be 120 million or should the threshold be 500 million? Why? Because if the idea is to keep the SMEs out, the SME definition is 500 million in the Income Tax Act. So should we look at 500 million as the threshold? I would say at least the initial threshold, maybe for 1 year, maybe at least for 2 years during these difficult times, keep the SME out of this new tax, and thereafter maybe extend gradually the SME sector also to this tax. So that's just something that comes to my mind. Right. Before I conclude, just make another observation in relation to the appeal process. Now, again, we do find an appeal process which has been cut and paste from where? From the old Inland Revenue Act, not from the new Inland Revenue Act. Now, what we see here is there's a period of 3 years to raise an additional assessment, and after the petition of appeal is filed, there's another period of 2 years for the Commissioner General to conclude the hearing of the appeal. So altogether, what is the time period that we will be with the Commissioner General? 5 years. Maximum period of 5 years before going to the Tax Appeals Commission. Now, this is something that I would say a positive feature that we find in the new Inland Revenue Act. This time period was drastically cut down by making it originally 3 months under the admin review, which was basically extended to 7 months. But still, after the 7 months, you can go to the Tax Appeals Commission. So the time period has been drastically shortened under the new Inland Revenue Act. So my question again here is, why not follow the appellate procedure under the new Inland Revenue Act, and why a totally different appellate procedure that has been introduced in relation to the SSEL also? And also, there's something important. Now, again, I think many of us do point out that there's, how do I say, if I use the term amateurish tax policy making that we are witnessing here. Now we see a different appellate procedure in the Inland Revenue Act for income tax, another appellate procedure in the VAT Act, and another appellate procedure now coming in the SSEL. So we do have 3 types of appellate procedures. Now, I need to tell a small story here. In 2017, when the new Inland Revenue Act was being introduced, in fact, there were 2 separate drafts, 2 separate bills, 2 different drafts covering one, the income tax substance rules, and the administration rules separately. So at that time, I think the IMF intention was to create uniformity in relation to administration process. So that's why the administrative sections were reduced to 1 statute separately, 1 document separately. So 2 documents, 2 statutes went to, or 2 documents, 2 drafts went to the Attorney General's Department, according to what I gather. But at the Aegis Department, I understand both were put together, and we have the Inland Revenue Act with the administration section also confined only to the income tax. What was intended at that time was to create an administration process to get extended to all the other taxes, income tax or whatever that was the NBT at that time, etc. So that gradually the admin sections in other tax to be taken out, and the normal tax statute, the substance tax statute to carry the substantive rules, and the administration rules to be in 1 statute, so that all the taxes, irrespective of the direct taxes or indirect taxes, all will be governed under the same procedure. And Now we have forgotten that, and we are again going back to the beginning of the cycle again. So things that we need to keep in mind when we are making tax policy making. Over to you, Nista.
Thanks a lot, Suresh. Over to you, Sivanesan, just to take us through your initial thoughts.
Okay, thanks, Mr. First of all, I would like to thank CM Institute also for inviting me as a panelist. I have certain specific things to be addressed in relation to this bill. As we know, first of all, this taxable person is identified as a business. Any person who carrying out the business only will be liable for levy. Either you must be a business of manufacturing other than the importer, right? You must be a business of manufacturer, business of providing a service, business of wholesale or retail trade. Something like a chargeability like NBT, not VAT. VAT, when you carry out a taxable activity, that covers business as well as certain non-business activity also. Therefore, it's very clear. I think the law is, if you carry out a business only, you are chargeable. For example, if I'm getting a rent income, let's say for example, if I'm getting a rent income more than the threshold, so I think I am not liable for this levy as it is worded in the charging section. And even the business also, all the income is not liable for levy because that should be a turnover from the relevant business. So therefore, even if you sell the capital asset, that would not be liable for VAT, liable for levy. But you may be liable for VAT, but that's a supply. But you will not be liable for the levy. So they have to differentiate the chargeability section for this levy and the VAT. Secondly, I would like to comment on the chargeability, whether it's depending on the registration or based on the turnover threshold. That's a question I think you have to be concerned, because if you take up the VAT tax, the liability comes to the registered person. So if your person is registered under the VAT tax, of course, for the liability to register, there is a turnover threshold. Once a person registered person, even though for a particular period, if a turnover is less than threshold, he is liable to pay that. Because the reason there is because once you authorize to charge or collect VAT as a registered person, based on your, suppose your turnover has come down in a particular quarter, you can't give the money, you got to remit. But the other person is trying to claim the input tax. But look at the NBT Act, not like based on registration, based on your turnover threshold. Therefore, in this act, I believe as it is, it's not so clear. I believe you have to ascertain the liability based on your quarter. Or if your turnover is more than the threshold only, you are liable to pay. For example, like in one quarter, you may be exceeding the turnover threshold, then you are liable. So other quarter, if you are less than the turnover threshold, you will not be liable. That is my thinking on this. And because of that, I think the cancellation clause, the section 5 of the Act, I think once you register for the levy, you have to wait at least for 12 months for a request for a cancellation. So it doesn't make a logic because it's basically the copying from the VAT Act. With the VAT of course, under the VAT Act of course, if you want to get a registration, you have to be a very careful decision. Once you registered, you have to at least be there in the system for 12 months for you to apply for a cancellation. But that clause, when you're copying here, it doesn't make a sense here. So the other point what I have to emphasize here is as we know, this is the turnover-based tax. As Suresh said that it's a turnover-based tax. We had in the past also like a turnover tax, the national security levy, and thereafter NBT. Now we are coming with this social security contribution levy. So send the turnover-based tax. What is turnover is the amount receivable whether received or not. The real transaction value. So in that case, again, you are copying this section is copied, section 12. That is empowering the assistant commissioner to determine the open market value and issue the assessment. I think that open market value concept is not applicable here because it is under VAT Act only. The VAT Act always the value of supply should be in line with the open market value. But here the chargeability section is, or the liability comes based on your real transaction value. the amount receivable, whether they received or not. So bringing it in this act, the open market value in one on an ad hoc basis, I think it's not compatible. Then other point I want to emphasize here is for financial services. So there's no compatibility here. What is there in the liable turnover is defined for a supply financial services. 100% value addition referred to in section 3, subsection 2, item C. So if you go to section 3, subsection 2, item C, it's a turnover, amount received or receivable for financial services. I think that should be changed as a value addition on an attributable basis. And apart from that, I think I don't know what is the logic behind the charging a levy on the financial services. Might as well we would have increased the VAT on financial services to more than 2.5% more by exempting the financial services for this levy. Otherwise, what will happen is, yeah, we have to again find out there are 12 payments are involved, 3-4 returns, annual assessment to be given. So again, the department carry out the audit, no? So we have a happy so many. I think there are a lot of the administrative burdens, the taxpayer also there, and the department also. Then the turnover of the real estate business is defined as the value under the VAT Act. So in that case, obviously the value of supply cannot include the market value of the land. So that has to be removed for the basis of this particular calculation for the real estate business. Of course, I do agree with the other panelist and speaker also. This input tax, when you are denying the input tax, so I think it's giving a cascading effect to the. And when it comes to administration provisions, it's almost, as Suresh said, it's almost similar to the previous Illa Ramani Act. So there are good and bad thing on that. If you look at the good thing, I would see. So the under previous Illa Ramani Act, there are assessment process, and there is a reason to be given properly. That is very strong, the wording. And again, appeal procedures are well laid down under the previous Act. Suppose if you are not determined within 2 years, the appeal shall be deemed to be allowed. So that provisions are brought in here by copying the previous Act. Those are good things. But of course, the other side of it is because it will take more time for a settlement of the appeal. That's a negative part of it. And come to exemption also, I think already mentioned here, the agro processing is not exempted. That's a very important exemption to be given. And the tourism, because we are very concerned about now bringing a foreign currency to the country. So you are given an exemption on the transport business. I don't say transport business is not essential, but more than transport business, I believe the tourism sector should be exempted, because that's a sector where you earn the foreign currency, no? So even the VAT is now charged at 12% on that, on the sector. Again, on top of that, if you again 2.5%, is almost 15% on the invoice value. So that will be a problem. From this bill, the effect of the business, I would say, as we know, because of this no input tax mechanism, the cost will go up. All the overhead cost and the direct purchase cost will go up by almost by 2.5%. Unless you have a business decision to charge the levy on the customer, you have to sacrifice your margin also. So therefore, the business point of very tough this. And also the MRP, the certain businesses are governed by the MRP rule, like a supermarket, no? So yeah, of course, the value added tax, of course, there is a flexibility. You can change the price, MRP price, due to the change in VAT rate. But here there's no such a thing. But in that case, obviously the supermarket has to bear this particular levy. And also there are additional compliance, no? Because of 3-4 returns in a year, 12 payments, record keeping, the assessment procedure by the department, again, you're appealing, the appeal procedures. I think there are a lot of tax compliance costs will go up heavily due to this. The public point of view, as you know, the cost will go up. Already we are suffering the inflation. So again, I think there will be an additional cost on this particular levy. So that's all for the time being I have. Thanks.
Thank you, Sivanesan, for those thoughts. And yes, I think a lot of duplicity also in a way. I mean, if you take it, if VAT was increased to 15% perhaps, or even 17%, this revenue could have probably been earned. And revamping the VAT exemptions perhaps could have done a better job of raising the revenue we need. So I think we'll go directly into the questions. There are a lot of questions coming through. But just one question to the speaker, Mr. Atula Ranavira, since you covered all of the aspects, I just want to ask you, do you think there is significant or salient differences from the NBT Act for the benefit of our audience? Because someone shouldn't think, okay, I was either liable or exempt from NBT, so this is probably the same thing. I will be liable or exempt based on that, and there is no requirement for any detailed analysis to be done. Just a few points on the salient differences that you came across in your analysis.
Yeah, when we are comparing this law, the proposed law with NBT, the main difference is in the NBT law, we had input credit system only with relate to the manufacturing. Only with relate to manufacturing, we had that input credit. The NBT, what we have paid at the customs on raw materials, we were able to claim it against our NBT liability. But, and also when we purchase from another NBT registered person, suppose you were having those invoices, proper invoices, you were able to claim it. But in this, no, there aren't any input credits. Therefore, 100% cascaded effect is there on this, depending on the percentage of the turnover. That is the main difference. Then in addition to that, the normal payments and all more or less similar, just more or less the copy, but main deviation is that input credit.
On the exemption side, someone thinks that they are still exempt.
Yeah, exemption, there are a lot of differences. I think definitely before passing this in the parliament at committee level, they have to address to these exemptions. They shouldn't give specific wordings rather than giving specific wordings. In the case of agriculture, they should give agricultural produce, Sri Lankan produce in Sri Lanka or something like that. Because if they are going to address to certain things, if they want to remove, they can say certain things. If they want to limit, they can say other than this item. I think that is what they should do instead of listing these items. Because if you are listing, you have to be so knowledgeable, and so you have to have all the database with you. Without that, you can't do that. That is what has happened in this. Okay, thank you.
So there's specific questions on the Q&A. We'll probably go through them. The company providing shipping agency services to both foreign and local vessels calling in Sri Lanka port want to know whether both local and foreign services are exempt or only the services provided to foreign vessels. Anyone wants to take that? I think there's a specific exemption for foreign currency earnings. But on shipping agency,
item number 7, no?
Yeah, number 7 of services.
Services of a freight forwarder and a shipping agent license under the licensing of shipping agents, freight forwarders, that one.
So both should be covered, right?
Courier services. No, it's a generic one.
Item number 22 also a little bit of item number 22 services provided in relation to the ship building. That's a ship building, no?
Shipbuilding, yeah.
That is shipbuilding. International, that's something that.
But in 7, it says so far.
Yes.
So there's a limitation factor in that. Or courier services. Anyway, we have to read single one also and see how it is worded. As such services are in respect of exporter of any article from Sri Lanka.
That's right. So it's not whether it's local or foreign service, it's in relation to the type of transport, whether it's export or import, right? is what the exemption will probably cover. So I think detailed analysis needs to be done. Next one is BOI companies liable? Yes, it doesn't exempt any BOI company. It only exempts either a particular good or a service. But I think SDPs are special projects, and those, I think whatever the exemption that has been given will probably come through. Any views on that, Suresh? BOI companies, any exemption?
No, there's no reference to any BOI company specifically. So it's basically just exempted goods and the exempted services.
Right. So the point on retrospective effect, I think, was covered in quite a bit of detail. Another thing on this GSA, so under exemption point 4, transportation of goods and services. Please clarify whether this is relating to local transportation or international transportation. How it affects the general sales agents in Sri Lanka who are handling cargo and passenger ticketing for overseas airlines.
Yeah, so what we find there is basically just 5 words: transportation of goods and passengers. There is no specific reference there. So it's basically we have to go for interpretation and go on the basis. If I'm arguing the case, I would say basically that will cover, because if there's a doubt, that doubt should be resolved in favor of the taxpayer in relation to exemptions when we are doing it. So I will go on that basis and argue. But we are wait and see what the judgment will be.
Correct.
Whether a narrow judgment will come or a broader judgment will come.
Right. I think on collection of the levy, I think that was made clear by the panelists and the speaker. I mean, there is no restriction in collecting it. The third one, if a company has manufactured goods as well as import and trading goods and also some services, so all 3, how do we calculate the SSL? Any apportion can be apportioned accordingly. Mr. Sivanesan?
Yes, I think the manufactured goods, if it total turnover exceeding the threshold, so then you are taxable person. So then you have to take the turnover from the manufactured goods. You must take the liable turnover of 85% on that and compute the 2.5%. But if you are service sector, of course, you take 100% turnover as a liable turnover and compute 2.5%. But if it's a trader, if you are not a registered distributor, so then you are liable. So you have to take up out of your total turnover 50% as a liable turnover. On that, you have to work out 2.5%.
So in this case, they have all 3, Mr. They have all 3 in this case. So they have.
So you have to take the actual turnover from each and every segment. And,
yeah. Right. Okay. How is the applicability of this tax on export of services? Are they liable or exempt? Mr. Ranavira?
It is specifically mentioned under the services, specifically mentioned that it is exempted. If as far as you are providing services to be utilized in outside Sri Lanka, it is exempted. Now, various whatever the services, what you are providing to be utilized outside Sri Lanka, it is exempted. At the same time, there was another thing what we discussed about this inbound tour operations. There's an item covered the inbound tour operations also. Under this services sector, inbound tour operations are exempted. It says item number 10. Services of travel agent in respect of inbound tours operated where the payment of such pay is in foreign currency, it's exempted.
Yes. So there is, if you're earning foreign currency, there are some concessions, but you have to look at it carefully to fit your particular business. There is another one on if we are an exporter, is this levy paid on imports? That means if you're importing, manufacturing and selling, you have to pay the NBT at import point. Anyone wants to take that?
So it's activity-wise. So it's activity-wise. So that will have to be taken.
Right.
No, I think she's
there's specific exemption like that. No, I think the deferment.
No, I think the question is for manufacturing, if they are importing raw materials. Is it the thing?
It says, is the levy paid on imports even if we are an exporter? So they are not saying what they are manufacturing.
Yeah.
They are an exporter.
Yeah,
So
right.
exporter will be exempt.
Yeah, as far as it is exporting, the manufacturing, even what we are using for if you import some raw material, manufacture something, export it,
Yes. That will be exempt, right?
export part is exempted. Yeah.
Yeah. So the import part.
Import part also exempted. And item number 2 in the
also exempted.
item number 2 in the import part are exempted, but only the question there is how do you identify that part? Of course, if you are a deferment facility,
Yes.
easily understandable, identifiable. But if you have a export part is lower than 50%, I think practically it's difficult to
track it. Yeah.
Yeah.
So that I think they'll have to do something like that for VAT, where they give a bank guarantee and give some voucher or
That's
something like that.
That's right.
So that will work. That's not in the law. By regulation, they probably have to bring it in, I think, if it's provided for. Right. Our export company liable. So interesting point. None of us are sort of accounting in the sense someone can take this. How we should record in accounts. Is it claimable from income tax or will it be an expense in the P&L? And also revenue, if you're collecting it, it goes into revenue, or does it go into a control account, for example, various ways of doing it. Any thoughts on that?
I think it's a deductible expenses unless they bring a amendment to the Revenue Act under Section 10. Otherwise, a deductible expense for income tax purposes.
At the moment, right? Yeah, there's no disallowability.
Yes.
In terms of accounting, should it go into revenue or should it go into a control?
It's a part of revenue, I believe, because the NBT, sorry, the levy collected also is part of turnover, right?
Yes, correct.
Levy collection also part of turnover.
Correct.
So in that context, I believe it will go to the part of the turnover and charge to the income statement.
Correct.
Otherwise,
you can't do the same
turnover will not get reconciled with the VAT.
That's right. That's right. You don't have to. You shouldn't follow the VAT control system. I suppose because you're collecting a part of your revenue and paying. So you have to show an income and a expense. So a lot of sort of repeats in this liable to the plantation sector, tea, rubber, coconut, timber, and other minor crops. So if you're doing it as a business, I suppose, subject to exemptions, you'll be liable. Mrs. Sivanesan, you want to take that? What if you're doing it not as a business, for example, you have it as an investment?
Yeah, for example, if you do certain the activities, non-business activities. So I believe if you in a plantation company, if you sell the tree, no, that is not your part of business turnover. So then question comes whether this is not a manufactured article, right? Whether selling a tree is not a wholesale or retail market, no, because in that case there is a way. I think that may not be liable.
So there are a lot of questions coming through. Import and distribution of fresh fruits is liable at only 50% of sales or not? Yes. So if you're a wholesaler or retailer, Mr. Ranavira, you want to take that? If you're import and distributor of fresh fruits.
Yeah, if it, at the time of import, definitely it is liable at the rate of 2.5%. When we are selling, suppose he himself sell it, then 50% on the sales price, 50% of the turnover is liable for this 2.5%.
So the general sales. So there's a one. Let's take this and we'll probably close. Due to the seasonal sale, months of October to December, my quarterly turnover will be increased more than 30 million. But whole year turnover will not exceed annual threshold of 120 million. In order that, is there any requirement to register in SSCL?
No, you need not to get the registration because you can apply to the Commissioner of Inland Revenue for that excuse under that he can take the decision on that.
Any other views, other panelists?
So that's the question come whether it's a liability come based on the registration or based on the turnover threshold in a particular part. So if it would be, I think according to the law, it's based on the turnover in a particular part. So I would say if it's a particular part and the turnover is less than the 30 million rupees or whatever the amount, then it would not be liable, I think.
So I think the first rule is that the immediately past 12 months should be 120 million, right? So if he's not falling into that, then that first criteria is not met. The
So
other
that is the liability for the registration.
Yes, for the registration.
So once
yes.
once you register, the
Right.
law has no commitment that you have to pay every quarter.
Right. Right.
But like if it's like a VAT tax, the section 2 itself very clearly identifies the charges section itself. Only
Correct.
registered person is liable for VAT.
Right. Right.
But here there's nothing like that. Yes,
Suresh, any different view on that?
Yeah, so I think basically it's a two-stage analysis that we need to see. Before the day, from the operative date, immediately prior to the operative date, take the 12 months and check and see whether you have 120 million. If you don't have the 120 million, then check the, now according to this bill given, they're given is the first quarter, whether we have gone up about 30 million. If that's the case, basically the registration. So the law is silent after that, basically.
Yeah. Okay.
The third quarter, fourth quarter, 30 million is what is right here.
Yeah.
So you can rely on that loophole. And if you don't have 120 million early and the first quarter of you don't have, I would say, let's bet it.
Correct. Right. So I think with that, we're coming to a close. I'll just invite each of the panelists and the speaker to make final few comments, maybe 1 or 2 minutes, not too much. On this bill, any suggestions for the audience, any priorities to look at, what probably the policymaker should do. Now we still have some time before it is any critical aspect that 1 or 2, not too many. Just to conclude, starting with Mr. Sivanesan.
Yeah, actually this bill, as I think all we discussed, I think it's very not properly drafted, I think, when it comes to exemption, and that a lot of sections are not compatible. Therefore, I think if it's not going to be implemented on 1st July, I think we have to again revisit the draft, the people who have drafted the bill, and we have to carefully look at the compatibility, especially the exemption schedules. No?
Yes.
So you should not give any of the unwanted exemption as well, no?
Correct.
And wherever the sectors should be exempted, you must exempt it.
Correct.
And of course, I think this is not a time to charge this levy because the business are already huge cost because of cost escalation. No, the margin has eroded, so they are going to charge this one. I think there will be additional burden to the businesses as well as to the public also. So therefore, anyway, it's a balanced decision. I think the government require revenue, but as Suresh said that this levy was wanted to introduce sometime before when the income tax rate and the VAT rate was lower.
Yes.
But now, of course, that can be supplemented through the increase of this tax rates already done now, 1st October onwards. That this situation, whether this you have to bring this levy as well is really a questionable.
Right.
Thanks.
Thank you, Mr. Wilson. Mr. Suresh Pereira, a few comments from you.
Yeah, I think now, like all the panelists pointed out, okay, if you take this bill alone, yes, we do find a lot of shortcomings basically. But before going there, I would like to take a step back and say that basically the introduction of this tax again, not this bill, but from the budget stage itself, we are basically polluting the tax. The tax regime in Sri Lanka by introducing this again, that tax on turnover. We have been trying to come out of this from 1998. No, we basically wanted to go out the cascading tax and basically go to the value addition tax on value addition regime. So what we see here is basically again we keep reinventing the same thing. We keep doing the same mistake over and over again. So why is this happening? This is because at the, I would say, the finance ministry or the government level, we don't have a proper skill set to do proper tax policy introduction, proper to formulation of proper formulation of tax policies correctly in Sri Lanka. So it's a dearth of talent. This is just short-term things that we keep doing. So that we have to understand and we have to address that issue first.
Sure. Thank you, Suresh. Mr. Anaviro, a few comments from you.
Yes, I have two main things. One is definitely before passing this law, all these weaknesses and the areas which are not properly addressed to be improved. That is very much required, because that is to give the maximum benefit to the taxpayers. Because otherwise, what will happen? Always they may have to, rather than doing the business, they may have to be in the revenue department to sort out the issues. Right.
Yeah.
That is one thing. It is very much important. The second thing, as Suresh also pointed out, this long-term tax policy has to be established in the country. This is one of the biggest mistake in Sri Lanka. Now we introduce various policies. After 2-3 years, somebody change it. Now, as a result, sometimes now when we are promoting these FDIs to Sri Lanka, this is the biggest issue what we are facing. These investors are asking how long this law will continue. Now, as an example, if we'll take BOI company, where the 100% shares are owned by foreigners. Now we may have given them the undertaking that for next 10 years, no income tax, or for next 10 years, no dividend tax. You can take everything out. Now suddenly we are reintroducing sometimes. It is required, that's true, but reintroducing some taxes on them, on the investors. Then we reintroducing the taxes on the businesses. Now there should be a long-term continuous tax policies. This is very much important. The political parties, governments might change, but we have to continue a common policy. I think those two are the most required things to be addressed now. Thank you.
Thank you, Mr. Anavir. So just a last comment from me, just as mentioned by the others, I think it's critical that the policymaker does engage other parties like, those on the panel, institutes like CMA, maybe the Institute of Chartered Accountants and SEMA, and also work with professionals, heads of business associations to ensure that where they're giving exemptions, how this is done, whether it should be consolidated, that those feedback be obtained and bring that into policy at least now, so that we don't have duplication, unnecessary exemptions, and unnecessary administrative burden and cost. So that is a few last points from me, and I would like to thank CMA again and hand it over to Gajendra, Mr. Gajendra, or Mr. Professor Butterworth.
As we come to end of today's proceedings, now I invite Professor Lakshmanar Vattavala to deliver the concluding remarks.
Thank you very much. I think we have listened to a very interesting and also detailed explanation on the proposed Social Security Contribution Levy Bill. I just want to check with Mr. Atula and also Mr. Nista and the other panelists. Now we have more than 100 questions, how do you think that, because some of them, of course, we are not able to answer. How do you think that we can handle that? Can we answer it later and send it to them, or what do you think we can do?
Must have another session, bro.
Session will be difficult, but I don't know whether. No, we can send the questions to you all. I don't know. Mr. Atula, what do you suggest?
Yeah, definitely I can give my full support. But I think out of these questions, most of the questions are repeating.
Yes, have been addressed because they came while the presentation was going. Yeah, while the presentation was going, so I think a lot of it has been covered, Professor, although I went from the beginning.
Okay, right. Thank you. No, if that is done, then of course, certainly it's okay. But maybe as from the participants' point, if anything had not been answered, kindly let us know. Then we can refer it to our presenter and the panelists and get their views and give it to you. So let me thank all the presenter and also our eminent panelists. I think we had a very good explanation of the whole thing, and looking at what was said, I think now we are a little worried. Earlier, we thought it was just a straightforward one, but looks that there are a lot of things that need to be clarified, but I hope that will be okay. But about one of the concerns, of course, came from this SME sector, then of course the importers, and then of course the distributors, and also the cascading effect, which is which I don't know whether they would have really seen the impact that it will have, because on the whole, ultimately it will be the customers or the society that will have to meet the cost. So that's something that we need to look at. But I suppose government is in need of money, then the businesses are unable to pay this. So there is a big question mark at the moment. But I do hope that in time to come that we will be able to improve this situation and then go forward. But as was explained, these need to be discussed, these need to be put to the private sector, because actually they are the people who are going to pay it, to our professional organizations, various consultants, so that if their views are taken, I'm sure that a better maybe a bill could have been prepared before it is passed into parliament. So it was also mentioned that with some of the matters that were pointed out. So if Mr. Atula, Mr. Nista, and others can help in that, from what has come out of this seminar that we had, then I'm sure that we'll be able to forward those. But maybe individuals also now, maybe the firms and others can also take those up, so that the more people making the submissions would be better, so that it could be handled. So once again, let me thank our presenter, Mr. Atula Ranavira, then of course our moderator and Mr. Nista, then our other two panelists, Mr. Suresh and Mr. Sivanesan, for your valuable time spent with us. We had maybe, I think, close upon 400 or more than that who attended it. Of course, the registrations, it was close upon 700, but we will try to see whether we can take all these things, the presentations plus the PowerPoint presentation and the recording, which we will be able to send to all of them, so that it will help to educate them and also get to know what is there. So once again, let me thank our compeer and the chairman of the tax committee, CMA tax committee, Mr. Gajendra Puendran, for taking his time and then making the announcements and others which have gone very well. So also my thanks to all our participants. I do hope that you have been able to gain a lot, and if you have any sort of things still left, kindly let us know, because you will also get maybe a thank you letter, and for those who do not attend, we'll also get another letter telling that we regretted that they have not attended, so they can all send any questions that they have with that. So once again, let me thank everyone and wish you all the very best, and we do hope that maybe we can continue these seminars, which are really a matter of adding value to everyone, to keeping them updated with the knowledge, and that will be able to help the government and also our customers and our clients. I'm sure the professional firms are looking at it. Maybe more tax work is coming to all the professional firms because of this new legislation that are coming in. And I'm sure that you all will all be able to give very good advice to them. So thank you and all the very best.
Thank you.
Thank you.